For those of you that didn't know us before, InfiniGold, we're the technology provider behind the Gold Pass application. And I'm glad I'm speaking, have the speaking slot after Richard, so I don't really have to talk that much anymore about what we do. You already know our product, you know what we're doing and what it's all about. What I do want to do, though, is just a few words on the background where we're coming from, because that explains quite a few questions that also might come up as to the technology choices that we have taken and how we're doing things. We're a commercial spin-off out of the Capital Markets Research Centre, a Sydney-based research centre that is funded by the federal government, by industry partners, and has basically a lot of the major universities in Australia involved. What we do, or what we want to do, is bridge the gap between academic research on the one side and industry requirements on the other side, and by doing so, create research, industry-relevant research, and develop new products and technologies that are relevant for the market and that improve the fairness and the efficiency of these markets. We're running with about 80 concurrent PhDs at the moment. We're running one of the world's largest PhD program in financial markets. We also run a digital research group. Some of us in that group have more than 25 years of experience in digital currency. Now, hang on, blockchain has been around since 2008. We've been fortunate enough to work in the 1990s with the inventor of electronic cash, with David Choum, on a company called DigiCash that was doing basically what today you would call the digitization of a fiat currency. 20 years later, we're running DigiCash yet again, issuing Australian dollars under the Australian Payment Services Licence. On the basis of that experience of digitising assets, we were looking at, what else? What else can we do? What's the next step for us of digitising? And that's how we got involved with gold, how we got involved with the Perth Mint. And what we're doing now is creating not digital dollars, but digital gold. So I heard the discussion, it was also Joshua that mentioned before, so what is digital gold? Is Bitcoin digital gold? And probably if you would have asked a year or two ago, that's what a survey would have come up with, probably with most answers. But today we're talking more about digitising assets. So we define, from our side, digital gold as digitised gold. So the question is, digitisation, what does that mean? What does it do? And I looked it up in the Gardner IT glossary as digitisation is the process of changing from analogue to physical. But what does it mean for a physical asset? I can understand how that works for information that is on a piece of paper and now goes into a database. But what does it mean for a physical asset? Well, first of all, the process is very simple if you look at it from a high level. The most important thing is that you store the gold, the physical gold, somewhere securely at a custodian that hopefully is trusted not only by us but by the community out there. And what a better trust partner than the Perth Mint. Then we digitise that asset, so we issue tokens or certificates that represent that physical metal in a one-to-one volume and issue those certificates, with the difference that now we can fractionalise that asset. So a 1 kilogram gold bar can be split up into 1,000 1 gram tokens or 1 million milligram tokens, however small you want to go that. And by doing so, we're lowering the barriers of entry for any potential investors and for applications that are being based on top of that later on. So trades become instant. They become a lot easier. There's no settlement required anymore. We even have peer-to-peer transfers that are very easy to implement. As simple as it sounds, as long as you have a custodian that is being trusted, it seems that digitisation of gold is a piece of cake to do and to implement. But of course, there's a lot of light, there's shadow, and while ownership of a physical bullion or of a bank account can be relatively easily proven, to the tracking of ownership of a digital asset moving freely around the digital markets and keeping a registry up to date is actually a more different challenge. And this is where blockchain technology comes in as one of these vital components of this digitalization process. It's a distributed ledger that offers the ability to cryptographically secured, create a list of transactions, of records that is immutable, and that is also creating the perfect audit trail. Blockchain, of course, is not the only technology that solves that problem. There's many different ways of implementing and keeping on top of that challenge. But there's something else that it adds to this market that we're now seeing developing. Blockchain networks, and in particular the Ethereum network, have created an interoperable platform to exchange digital assets. So if I issue a 1 gram token as an ERC20 token on the Ethereum platform today and sell it to my customers, then that customer can pass it on and can pass it on and can pass it on and moves freely around and is no longer part or limited by the system of the initial issuer. As part of the presentation, as I said, I want to have a look at a few of the examples that implement digital gold today, and also look at some that are currently still in development. To do that, I put together a list of sort of desirable characteristics, attributes, and features that we would want to see in digital gold. I think it's a pretty straightforward list, so I'm not going to go into too much details on that. Of course, we want to have security. I already mentioned the trust in the issuer and the custodian. One of the key problems that the solutions that are currently on the market have is liquidity. So I want to have enough depth in the asset that can also come in with a larger order. Transferability is clear. And what is very important, especially for investors that could sort of seek that security of gold, of the physical gold, is that I can reverse the process of digitization and actually redeem my digital gold for physical once again. Ideally, I want this solution to be globally available, but we all know that regulatory obligations make that very difficult at the current stage. And of course, one of the features that I want to see, or one of the things that I want to avoid as an investor, is that I have to pay FX fees because the currency that I'm currently holding is not being accepted, be that fiat currency or be that cryptocurrency. So what is out there in the market? And you can see there's an overwhelming number of providers that are out there. And I must admit, I sort of stopped searching on Google when I couldn't fit any more icons on this slide. And I'm sure there's many more out there. I've already left the ones out that have already gone bust or that never made it to market actually in the first place. And I have to say though that not all of them are particularly interesting, not all of them are particularly innovative, and I'm sure many of them will disappear very quickly again. With the recent ICO hype, they've been popping up everywhere, and it's one thing. Well, it's one thing to stick a couple of gold bars in a vault, to issue some tokens, and to raise a decent amount of really cheap capital with an ICO. It will be yet another challenge to actually implement a system in the digital markets and prove yourself as a successful solution for digital gold. So we'll see how many of these are going to be around in the next 12 to 18 months. So let's have a closer look at a few of them that are just sort of an example also of the evolution that digital gold has taken over the last years. One of them is Voltoro, and Joshua will speak later on today. They've built a secure place to hold cryptocurrency, and at the same time have become the biggest crypto commodity exchange where investors can swap Bitcoin into physical gold when cryptocurrency markets are going south. Vaultura is digitizing gold stored in Swiss vaults onto a private blockchain for record keeping and for auditing. This certainly adds to the security, as I'm no longer just relying on a single database entry for my account balance. That is much easier forged than, that is a potential attack target. Instant settlement, delivery of physical gold, low cost for trading, an internal marketplace. What the guys around Joshua do, they do very well. Compared to the desired list of features from before, though, there's a few things that are still missing. Next, looking at Digix, which is, for many, the synonym at the moment for gold on the blockchain. Run as a DAO, so a decentralized autonomous organization. It was the first project that used Ethereum for a new kind of crowdfunding, which was later labeled an ICO, so they were the ones that kicked off the whole hype. When they launched in April this year, so when they actually, their ICO was a couple of years ago, when they launched in April this year their gold token, everybody or many believed that DGX, which is the acronym for the token, and represents 1 gram of gold, so each token represents 1 gram of gold stored in a Singapore vault, would be a game changer. Finally, an ERC20 token backed by gold that can move freely on public blockchain. The first 50 kilograms of gold sold very quickly, and everybody thought, well, this is the way things are going to go now, as predicted. But then it was strange. Something happened. It slowed down dramatically in the sale of gold. And that, as a surprise, even on days where Ether in the crypto market tanked by double-digit losses in a single day. So why could that be? And I had a bit of a closer look at Digix myself and was curious just to try it out myself. So I opened, I registered my wallet there, did the KYC, transferred some Ether across. So surely enough, that was all working fine, all smooth. But then already when I wanted to buy some of the gold tokens, I noticed their low transaction fee of 15 bips was being undone very quickly by an ask price that was 300 to 400 bips above the gold trading price. Well, I've done it anyway. I wanted to try it, didn't invest much. So I bought some Digix tokens, I played around with them, I transferred them forwards and backwards, all was fine. So I thought, well, been there, done that, I'll just sell it off again and level my position. Except I couldn't find the sell Digix button. Like, you can buy it, but you cannot sell it back to them. So I contacted their support and I said, so, I don't know, I must be missing something. There's something hidden in your application. I can't find the sell button. And they said it's due to regulatory requirements in Singapore, they cannot buy it back. And well, if you ask me, that's a major flaw in a system like that. If you just pump into and you can never get out. So anyway, they advised, go to one of the exchanges where we listed on, and you can sell your tokens there. At that stage, there was only 2, so I looked for the most liquid one, and the choice was between one with $2,000 daily turnover, and the other one was $3 million. So I thought it was pretty clear which one to go to. So I registered there, sign up, do the KYC again, etc. And happily enough, go to the trade screen, and already there, something looked a little bit suspicious. I had a spread of 15%, but yet the trades kept on going through every minute, almost like a roster. Another one, another one. So I thought, well, I just ended my ask. So at the priority, just below the last trade reported, and I thought, well, that will only take a moment. And tick, sure enough, the next trade came in, but it wasn't mine. It was just below my ask. So I thought, well, what a coincidence. I lowered my ask again below the trade price, and tick, guess what? The next trade came in below mine. And that's how it went on. I spare you the detail for quite some time. And I was able to push down the price of Digix, and that was not only on that particular exchange, but on market cap, you could follow Digix, the same happened there. I was able to move the price down by 15%, and that with an order that in the end was unfilled of 0.1 digics, so the equivalent of 50 cents. Surely enough, I guess you all know I've been in the business of capital markets surveillance monitoring for 10 years. What we're looking at is a feed of wash trades and an algorithm that's not implemented particularly intelligently. And to the credit of Digix, it's probably at the wrongdoing of the exchange and not of Digix. But it highlights one of the problems that we have in these markets. Those exchanges are unregulated. And we have a big problem there because, and it highlights the problem that Digix has, is they have no liquidity. So if I can move the price with a 50-cent order, what happens if I've got $100,000 or $1 million that I want to liquidate? What happens to the price of Digix then? Bottom line is, I guess the 3 million volume reported on the exchange is probably more like 3 grand. I'm not sure whether at this stage Digix is really the place to go if the bottom hits the market, if the crypto market hits the bottom, and there's a portion of that $200 billion crypto assets going the way of gold, or physical gold. That is not helped either by Digix global daily maximum volume of 300 grams of gold amongst all their users. So that's the maximum that they can sell in a single day. But nevertheless, in my view, Digix at this stage is one, or probably the leading platform in the space. It shows what can be done. They need to work on those weaknesses. And it highlights at the same time some of the challenges that we all face in the crypto market and in the digital gold market in particular. So far we looked at digital gold as an investment platform and as a safe haven in stable coin in case of volatile crypto markets. Spinning the story a little bit further, we're looking at nothing less as bringing back the gold standard that was talked about this morning as well. So actually creating a currency once again that is backed one-to-one by gold. This clearly is also one of the trends that is currently happening in the digital gold space, though one might argue it's not really actually happening, but it's just happening in white papers that are created by marketing guys that are trying to create sexy stories for ICOs, claiming that they could take a fraction or a part of the multi-trillion-dollar payment market. You'll notice that many of those promise you credit to spend your digital gold on credit cards and debit cards, and that you're going to be so much better off because gold is a global currency. Well, in my view, you swap in a single FX transaction from, say, AUD into USD, into two, you go from AUD into gold, and then you go from gold into USD. I don't think that's really that beneficial and innovative. But do gold currencies really have the option or the potential of revolutionizing the payment sector? Well, Kinesis is a popular platform proposal, and I say it's a proposal, right? It's not out there yet. They're currently trying to raise funds. That's also why I didn't do any of the marking against our attributes, because they're not there yet on that level of detail. But they're promising nothing less but in the mission statement that they're out there to form the basis for a new monetary system. Pretty bold statement, and I won't give you my opinion whether they have any chance in hell to achieve that, but the reason why I present them is they have a couple of really interesting aspects that become part of the digital currency or the proposal that they're offering here. And the key word there is tokenomics. And they are being made available by something called smart contracts that are being introduced by the Ethereum platform. And basically, they're like small algorithms that get executed, for example, when a token transfers hands. In this case, they are creating an incentive for the different stakeholders in that system. So in that ecosystem, so for example, the asset provider that brings in the gold and deposits it in the vault to create the asset back in the token. The consumer that actually deposits some fiat currency or some other currency in terms of in return for buying the token, the investor that holds the token, or recruiters that actually bring on new users on board. So all these stakeholders, every time a transaction is being made in this network, every time a transaction fee is being generated through a transaction, they automatically will get a tiny little cut, but it all sums up, a tiny cut of that transaction fee in return for their role, for their services within that digital currency ecosystem. And that is really the revolutionizing idea or the concepts that we're only scratching the surface on that smart contracts are bringing to the world of digital gold. Only problem is, of course, I guess transaction fees, somebody got to pay for it at the end of the day. And that's why I personally think Kinesis is going to get undone. If I look at their business plan, they're planning with 45 bips of transaction fees for every single transaction. And, well, a really modest target for year one of $850 billion US turnover. Well, I'll leave the judgment of that business plan up to you guys, but, well, you know, so much for it. But I really think there is some interesting concepts in there that one can take up and is really highlighting where I think the market is going to go and things that we can implement into tokens to actually make them also more acceptable to the crypto community. Brings me to the last example of that I want to showcase today. And no, I'm not going to run through an InfiniGold presentation without talking at all about our platform. Richard's already mentioned all the features of GoldPass. I don't have to go into any real details there. To ensure there's no misunderstanding, let me point out one thing. This is not a blockchain development, right? So we're not using blockchain. We're using a proprietary, private or closed loop system that is based on cryptographically secured digital certificates. In the end, it's nothing else but another technology for implementing a token. There are some differences, but I don't want to go into too much detail. What I want to point out, though, is that GoldPass is really, from our point of view, the first application based on InfiniGold technology. We believe, or what we intended to do, is build a platform rather than a single application that is forming the base infrastructure for digitizing, so creating digital Perth mint gold. And on top of that, we're here to be developing a range of additional new applications. For example, we want to create a similar service for gold dealers around the world that can white label this service or this solution, and then offer their customers digital gold under their own branding. We're going to integrate with internet banking systems for banks to yet again offer their customers physical gold. And we're talking to private wealth managers, to institutionals about new product ideas. At this stage, not the sky's the limit for us, but really our development resources as a startup. And you know, if you take this setup of already having digitalized gold from Perth Mint, one might even say we could use that setup as technologies are so comparable and build a cryptocurrency right on top of it. To summarize, the trends are clear. Gold is being digitized to create easier, safer, more efficient way to invest into physical gold. It's being used as a safe haven for volatile crypto market. Stablecoin is the key here. Gold is also used by other stablecoins as a collateral. And there is a strong push, at least sort of on the marketing side, into the payment sectors. There are, though, and that has also been clear, and we are very clear about that, a lot of challenges still ahead of us that we need to crack over the period to come. One of them is liquidity. Seems okay for, depending on the platform you're looking at, for an investment point of view or investment case. But certainly we have a problem if we're kind of looking at the safe haven kind of scenario, big amount of money in a very short period of time trying to be converted into physical gold. However, the biggest uncertainty from our point of view certainly comes out of the regulatory obligations. KYC requirements, while they're simply a burden and quite frankly a pain in the backside to implement and to maintain, at least they're comparable around the world. And you know, There might be different documents that you have to verify, but the kind of procedure, and it is clear what you have to do for a gold token. But when you look at the classification of what such a token then would be in a certain jurisdiction, is it a financial instrument, is it a commodity, that has a huge impact on the development of your product and of course on your regulatory obligations. And there is a lot of uncertainty on that. What makes it even worse is it's different in various jurisdictions. We heard about the US before, Europe is another story. China is sort of completely off topic anyway. So basically what you have to do is you've got to do the same proof, the same investigation in every single country, in every single jurisdiction you want to issue into. And that not enough. Then the next thing, you're looking at the transfer of the tokens. So does it fall under EU money issuer license? Is it falling under the Payment Services Directive? Do you need a financial services license, etc., etc., etc.? Security, of course, is something that in the IT industry you'll always be working on. We're not only talking about the security of the assets, but also, of course, all the information that is collected along the way, be that transaction details, user details, KYC data, etc., etc. And that ranges from secured key storage to the app itself to efficient handling of potential hacker attacks to your platforms, denial of service, etc. Last but not least, I mentioned the desire of these tokens freely moving around on the blockchain, in the blockchain ecosystem. And just on that little Digix experience, we have noticed that as an issuer, I might actually have a problem because I can't control what happens to the token once it leaves my customers that have KYC'd wallets. It goes onto secondary exchanges that are unregulated. What if that token moves on and on and on, and at some stage gets involved in some illicit trading, in some money laundering and fraud? And what does that mean for me as an issuer? Are there any legal implications? So these are really some of the questions that we're working on with legal in this space, and are pointing out that there's lots of work to do still. We're excited to be in this space, and we're very excited to continue working there. Some of the work will be a lot of fun, some of the work will be really frustrating, but we're there and we're happy to be there, and I think we're only seeing the beginning of it. Thank you.